Thank you. Thank you so much. I know you guys all banked on Facebook today. That shit moved. I didn't even know there was news behind it, to be honest. When I was charting it earlier this morning, I was looking for my levels for calls. I was like, hold on. Like, I felt like I was charting it wrong at first because I was trying to see if there were more like, you know, incremental levels, more, like incremental support and resistance levels up top, or resistance levels in this case. And there wasn't. There was like, it was showing pretty much gaps. And I was like, that's interesting. There's just gaps. So if price breaks this level, it can gap to this level. But I mean, I don't know if there's any news behind this. So I guess it'll just gap on a technical level. But then I was hearing in the chat that there was news behind Facebook and they were supposed to be dropping some news today. So that explains the reason for the gap in the rally and all that. So it all made sense at the end of the day. I pieced it all together. Oh, sorry to hear that, man. Were you holding swings or something and you just had no buying power? Because I like to keep buying power, enough buying power to take at least 1 to 2 trades the next day if I'm swinging. Oh, you have a cash account. Actually, if you had a cash account, you could have used your starting day buying power, and you get about 4 GFVs. If you're on Tastyworks, you get 4 GFVs before you get a PDT. So 4 GFVs mean you use your profits to trade, and you don't let it settle. They'll mark you the first time. You get, I think, 5 of those actually. You get 5 of those, and then you get marked as a PDT. Oh, nah, it works differently on Thinkorswim. That's why I tried to open a TD account just to see how it worked, and then I seen it didn't work like Tastyworks, so I went back to Tasty. How's everybody doing today? I'm doing good. I'm doing good. You guys know I haven't been trading for the past 3 weeks now. Yeah, I'm going private on my Instagram. Why not? Because I've been getting levels for you guys and helping other people and getting ready for the classes and all that. I've been so busy, so I haven't had time to actually sit down and take trades for myself. I've taken trades, here and there, but as far as like actually sit down and trade throughout the day, I haven't been able to do that. I'm not tripping though, because when you chart getting levels, you don't miss out on anything because you're charting and you're getting both sides of the tape. So you're getting levels for your calls and you're getting levels for your puts. So I could take a whole month off and let's say miss out on a whole rally or something like that, right? I wouldn't care because all I have to do is just come into the market and just get levels for that day and just trade within those levels and make my money and then get out. That's all I have. That's all I'm worried about. And that's all I have to do. So yeah, I'm not worried. I ain't tripping. It's actually been helping my charting a lot better. I'm gonna show you guys all that today. Although, do you reset days? Yes, I do, Trader King. It's a bit extra, some people will call it, but I just like to be safe than sorry. I feel like fresh levels are better because I mean it's just I don't know. It's a psychological type of thing. You can rely on old levels, or like let's say you created new levels for the day, and let's say like the market sold off so bad that it hit your previous levels that you made or whatever for the previous week or like the previous month or whatever. So you can then rely on those levels, but don't rely on them too much, but rely on them to some degree because they're still accurate and they still will work. So just whenever you guys are creating levels and all that, just I would say just save them, keep a document or something like that, and just save them in there. And then if price ever does come back to those levels that you've created, just open that document and pull those levels out. I'm going private because don't you know how people have private Twitters? I'm gonna start soon. But don't you know how people have private Twitters? I'm gonna do an Instagram version of it and make a private Instagram. So all the people that are following me right now are gonna be able to get access to my alerts and watch list that I post in the chat here on Instagram for free. And the people who aren't following me, when I go private, they're gonna have to pay $25 to then gain access for a lifetime access to be following me. So it'll work like that. It's just a way of trying to create another source of income for myself, so to speak. How many trades on average do I do? It depends. On my watch list, I like to keep about 4 tickers because 4 trades is more than enough. I mean, if the day is really good and like 2 trades are really, really good, I'll just cap it at those 2 and not really chase it or anything. But on an average day, I'll take about 4 trades and just play it with those levels. Strong sell-off, I believe, spot in 292 is the actual crucial point. As far as fundamental analysis goes, I can't really say much right now because I haven't done, a deep enough due diligence yet because the market just closed. So I have to actually look into what happened for today, look at the data tape and all that to really give you guys an explanation of what I feel is going to come. But all I can say for right now is just rely on the levels and you're straight. You know, don't really focus on news. Just like with Facebook today, I relied on levels and I didn't even know there was news. And, you know, my alerts hit. And then I went back in a chat and seen everybody was talking about news. And then a notification came on Twitter about the news. And I was like, oh, so that's why my levels hit. So again, like, you don't have to rely on news when playing with levels. That's the great part about this stuff. But let's get started. Let's get started. We have everybody in here. Let me see if I could get this down. Use confirm mysterious. I believe so, Ninja. I think that's true. To be honest, it has to be timed. It has to be timed. So like, look at mRNA. It has to all be timed. But yeah, let's get started. So today we're actually going to be going in depth with our EMA strategy. Now, our first slide, we're going to be understanding moving averages. The EMA moving average strategy consists of a couple of simple steps. I like to keep my trading very simple because I feel like if you complicate your trading, you know, it just clouts your brain and clouts your memories, and then your emotions get the best of you. So we'll use the EMAs to find buy signals, sell signals, uptrend signals, downtrend signals. Do keep in mind that these EMAs are lagging, so you don't want to rely too much on them, but rather use them again as a confirmation to enter a trade. Most of all, this strategy requires patience. I cannot stress that enough. This strategy requires patience. So long as you have patience, this strategy will work out for you to your favor. The EMAs we'll be using are for, does anybody have any questions about the first slide before I continue? No reply. I'll take that as a no. All right. The EMAs we'll be using today will be the 9, 21, and 55. These are the EMAs that I use for my strategy, the EMA crossover. What we're essentially looking for is for our EMAs to cross in either direction to give us a buy signal or a sell signal. How do we find our buy signal? When the 9 EMA crosses above the 21 EMA and above the 55 EMA, that's your buy signal. There's not really much of a difference between the 50 and 55. The 55 just collects a little bit more, much more of data and then displays it. The 50 would just collect just a bit less. I mean, you won't really see much of a difference. I just like to use the 55 because it's an EMA that a lot of traders use. And if you use an indicator that a lot of traders use, you'll all get, you know, the same result, so to speak. So that's how trading works. We'll get to the time frames in a minute. At this point, when the 9 crosses above the 21, 55, and EMA, that is considered your buy signal. You want to wait for the candle to close above the 9 and open above it for that confirmation point to enter. The time frame you can use this on are the 5-minute, 10-minute, and 15-minute. Again, the bigger the time frames you go on, the bigger of a move you're going to experience and get. But as far as day trading goes, can use it on a 1 minute. Not necessarily. I don't like to use it on a 1 minute. What if you have the 55 SMA? The 55 SMA, again, remember how we said back in our previous session, the SMA, it's not as quick as your EMA. So it'll move much more slower. So you won't get as accurate of a signal. It moves day by day. That's when it decides to move. It doesn't move, you know, intraday. As far as the EMA goes, the EMAs move intraday, and we'll see an example of that right now. Right now, I'm going to show you guys day trading, and then we'll get into scene trading if we have time. So right here is an example of our buy signal. As you can see, our 9 EMA is represented by this green line. Our 21 will be represented by this orange line, and our 55 EMA will be represented by this red line. Now, as we can see here, our 9 crossed above our 21 and crossed above our 55, giving us that buy signal. Because if we look at the candles, what happened? As our 9 crossed above our 21, we had a nice green candle that formed. Our next green candle formed, and that was green enough to pull this 9 EMA being our leading indicator. Remember, your 9 EMA is your leading indicator. So as price went up, it pulled our 9 EMA to cross that 55, giving us a nice buy signal around this point in time. Now, again, your 9 EMA is going to be your leading indicator. So it's going to act like like an anchor to price. It's going to cause price to, move. So if the price, we'll get to that. I don't want to go too in depth in it. Do you need to use a 55? Yes. For that extra confirmation of the buy signal, you want that 55, because that 55, look at it as if your stock, if price is above your 55 EMA, that's considered the overall trend to be up. If price, the overall intraday trend to be up. If price is below your 55, the overall trend will be down, and you'll see why. So as we can see here, we got our buy signal, and at any point in time during our buy signal, we could have entered, but you see our candles closed above our 9 EMA. Are using that. So quick question. Let's say we had this candle and our 9 crossed above our 21, but hasn't crossed above our 55. Would you take calls? Yes or no? If anybody can answer that. No. Correct. At this point in time, since we are new to the strategy, it would be safe to not take calls and to wait for the full confirmation of that buy signal. Because let's say at this point in time, yes, we broke above that 9 EMA. Yes, at this point, we broke above that 21, but we didn't break that 55. If you were antsy, you would have said, oh, I think I see a buy signal, but it technically wasn't a buy signal, and you would have gotten faked out because you didn't get that full cross. You want to wait for that full cross above in order to buy. If it doesn't cross above, if your 9 doesn't cross above your 21 and EMA, your 21 EMA and your 55, you don't want to buy. Would you just use a 9 crossing the 21? No, you don't want to use that 9. Because look, if I just use my 9 crossing the 21 as a buy signal, look, my 9 crossed my 21 here. I would have, let's say I would have took this buy here. I would have took a loss because boom, it hit a resistance point here being my 55, which that overall reversal. So it canceled that overall reversal trying to happen to put the stock in an uptrend. So boom, we hit that 55 EMA and got slapped down right back under that 21. So I would always want to wait for that cross above the 55. Because if you look here, like let's even go back in the previous days. We have our 9 here, our 21 here, and we have that cross above the 55. What happened? Boom, green candle and another green candle. So it causes the stock to push in an uptrend once you get the cross above the 55. You want them in that order. Yes, the 9 above the 21 and the 55 to get your buy signal. Now finding your uptrend signal. When your 9 EMA has a clear gap from your 21 EMA and your 21 EMA has a clear gap from your 55 EMA, that lets you know that the stock is in an uptrend. So let's say you're in calls. When you see that those gaps happening, that lets you know, okay, I can hold my calls so long as I see this gap, because I would know that the stock is in an uptrend. And I'll show you guys an example of what I'm talking about. You want your candles to stay above the 9 EMA in order to keep the uptrend intact. If your candles break below the 9 EMA, then things may get weird. Because if that candle breaks below and doesn't reclaim it and doesn't break above it and hold to tell you that, okay, I'm back above my 9, my leading indicator, I'm going back in my uptrend, things are going to get weird, and you might want to start looking to exit out of your calls or scale out of your position at that point. Does the strategy have a lot of fake outs because the red candle shows up after it crosses? No, this strategy doesn't have a lot of fake outs, but this strategy allows you to spot a fake out happening so you don't get faked out. And I'll show you an example of that as well. Let's continue. So here's an example of our uptrend signal. So as you can see, we got our buy signal here. Our 9 EMA crossed above our 21 and crossed above our 55. And boom, we have that gap from our 9 and our 21 and from that 21 to the 55. And it's been going for a while. Our 9 did break below that 20, our price did break below that 9 EMA, but we reclaimed it. It broke below again, but we reclaimed it. And it tried it again, but we reclaimed it. So every single time price reclaimed that 9 EMA, you know, it always went up. And another thing you want to note, let's say price broke below this 9 and broke below this 21 like it did and tested this 55, it didn't cause your EMAs to curl yet, trying to give you a sell signal. So your uptrend signal was still intact. That unless price started to close under these EMAs, things would have gotten weird. But price broke below and still reclaimed that 9, thus putting price back in that uptrend, as you can see here. Are there any questions about the uptrend? Yes, this is applicable for swinging, and if we have time today, I'll show you guys the swing strategy on this trade. But this is how you get your uptrend signal from your calls. So let's say I got my buy signal here, I would have taken my calls here, boom, or taken it on this red candle, you know, or something like that, or at a nice entry anywhere when at this buy signal. Then at that point in time, do you wait for the 5-minute candle to close or 1-minute candle to close above the EMA? So at that point, that's up to, it depends on your entry. Me personally, I do go on the 1 minute for my entries, but I do, if I'm, let's say I've watched the stock on a 5-minute time frame for a while, and then I've seen that buy signal happen on a 5-minute, I'll just take it on a 5-minute because I know the bigger the frame, the bigger the move that's going to happen. It's just going to happen in that 5-minute time frame or that 10-minute time frame. But you have already got that buy signal on a 5-minute, so that move is bound to happen. You get what I'm saying? With this strategy, you don't have to use any other indicators. You can just use your EMAs. You can use other indicators if you want, but that's only if you're comfortable with combining those indicators. You can solely take trades just based off of the 9 crossing below your 21 and 55. And I'm going to show you guys an example of this whole strategy played out pretty much based like with no indicators. And the only indicators I'll have are just my EMAs. I won't have any MACDs. I won't have stochastics. I won't have RSI. I won't even have my fib levels. So I'll just show you guys how this will work with just using these indicators. Usually, what about that right candle on 10:45 a.m. that closed on the 9 EMA? Did we get up there? So at this point, okay, that's a perfect example. So this is a good example of spotting a fake out and not getting faked out. So, okay, price is trending up. We were in our calls. We're in a nice profit. Now we see this red candle happen. So we understand once price breaks below that 9, if it doesn't reclaim that 9, things can get tricky. So price broke below that 9, tested that 21, broke below the 21, but reclaimed that 21. And then we had another green candle that then, boom, reclaimed above that 9 EMA. So if you were in a trade and you were in your calls and you've seen this happen, you would have seen the candle break below this 9 and break below this 21 and then quickly get bought right back up above that 21. And then your anticipation at that point then would be, okay, now we need to reclaim that 9 in the next candle, if not this candle, or else things are going to get weird. We're going to get to that 55 touch and then could possibly reverse. But luckily, we had a green candle and boom, we broke above that 9 and put us back in an uptrend, as you guys can see. Checking the volume with price can keep you. Yes. Adding, again, guys, adding your own indicators with this strategy would just add those extra confirmations that you need. And that's what I want you guys to do. Once you get used to using this strategy, begin to add in your own indicators. Or if you're already used to the strategy, then add in your own indicators as you please and see if those confirmation keys are adding up to each other. Like as Amen said, checking volume dropping. So if the next candle didn't reclaim the 9 and stay between the 20. I'm going to get to all that. You guys are moving ahead. I like that, though. I like that. So finding your sell signal. This is what you guys are all waiting for. When your 9 EMA crosses below your 21 EMA and your 55 EMA, that is considered your sell signal. At this point, you want to wait for your candle or price to close under the 9 EMA and open below it to confirm an entry for puts. So let's go to an example. So remember how in our previous example, we seen that the price was breaking below that 21 and it was breaking below, it almost touched the 55, but bounced back up and our EMAs didn't curl. It didn't curl to the downside. Well, that's not getting faked out. In that instance, you would have wanted to stay in that trade. That trade would have been good. But when your EMA start to curl, and I'll show an example of that after these slides, I'll switch over to Thinkorswim and give you guys live examples of different tickers with their strategy. But as your EMA start to curl and your 9 then breaks below your 21 and breaks below your 55, so it's under that, boom, you get your sell signal. So at this point in time, when I see this happen, I'll take a put. I'll get my sell signal. I'll wait for my 9 to stay, my price to stay under my 9 EMA, and then I'll take a put. At this candle, as we can see, like it closed out under the 9 EMA. It didn't go back up. So I would have taken a put here. Now, let's say I would have taken my put here, and then these 2 green candles happened here. Now you would have said, "Uh-oh, these 2 green candles came up. I think I got a bad entry." Literally speaking, yes, you would have gotten a bad entry if you want to be so technical about it. But if you're looking at the overall picture, you did get these 2 green bars. But as we did then open to test that 9 EMA, we rejected under it. So again, so long as price rejected and is under that 9 EMA, once we get our cross for that sell signal, we are still in our puts. So this would have been your average trader not using this setup would have seen this leg down happen, chased it if anything, because this is a nice fast candle, and seen these 2 green candles happen and gotten faked out. And he would have been sweating like, "Oh my God, my position is going against me. Like, I think this is going to reverse. I chased, I'm fucked." But you having patience, and seeing that, okay, we are still under our 9 EMA, but if we can break above it and close above it, then we can start to reverse. But if we don't close above that 9, we're still in bearish territories. You would have seen that happen, and you would have held on to your puts. And that's what would have happened. Those fake outs would have still happened, but boom, you didn't break above that 9 EMA. You stayed under it. So that 9 EMA acted as a resistance, so to speak, to your price. And it just kept going down. Now look at what happened here. At this point in time, your 9 EMA tried to break above here, and it tried to show momentum. So when it broke above and held, what happened? The 9 EMA start to curl as price held above it and tried to go into a buy signal. Now, at this point in time, I would sell. I would see this, and personally, me, I would get faked out because no, I'm not going to. I have already waited enough for these 3 candles to form, and they've already showed me that they wanted to hold and break above. So at that point, I don't even care if I get faked out. I'm just going to, play it safe. I've already captured this much movement. I'm going to just play it safe and take my profits and call it a day. Yes, I would have then came back and saying, "Oh, damn, like it got rejected at that 21 and boom, came right back under." But, you still captured a good amount of profits, almost, $1, $2 worth of profits on SPY. This ticker is SPY, yeah. So $2 profit alone on SPY at the money in the money contract. You do the math. That's good numbers if you ask me. Do you wait for lower lows and lower highs on a pullback to short? So to short, if I'm getting inputs and let's say I seen this happen, I would personally, since I know, okay, if a big ass candle happens, you obviously know there has to be some sort of retracement to the top to try and test some sort of previous resistance. There had to be some sort of resistance here back then. If we move back, there had to be some sort of resistance here that got rejected. So I would have known already, from my years of trading, I know from a big leg down, there has to be some sort of, buying pressure back up before it reaches that resistance point and then tests it and see if it breaks above or gets rejected. At that point in the time, it tested it and got rejected and boom, came back down. So let's continue. Finding your downtrend signal. When your 55 EMA has a clear gap above your 21 EMA and your 21 EMA has a clear gap above your 9 EMA, this is considered a downtrend. You want price to stay below your 9 EMA in order to keep the downtrend intact. If price breaks above the 9 EMA and holds above it, the downtrend will no longer be valid as price can start to form a support and then reverse, as we've seen in the previous examples. That gray is extended hours, but I'll show you guys those actions happening in actual cash sessions. This is just some examples for you guys. So as you can see here, our 55 has a gap well above our 21, and our 21 has a gap well above our 9. And if we look at price here, we got our sell signal a few hours ago, and we held above under that 9 EMAs. So going back to our example, when price is under that 9 EMA, that 9 EMA is acting as a resistance, and it's considered, that price is still in the downtrend. So if we look here, we had that gap for a nice period of time, and price always held under that 9 EMA, which if I'm in puts, I would have kept holding my puts because boom, my downtrend is still intact, just looking at my EMAs and looking at that price didn't break above that 9 and hold it. It always broke above it and rejected, acting as a nice resistance. At this point in time here, price then broke above that 9 and momentum came with it. Look at this nice volume candle right here, and held above that 9 EMA, which caused their 9 EMA to start curling, and then it broke above their 21, tested it, and then held it and tried to push higher. And I'm pretty sure if this held more, your 9 would then started curling to then try to test your 55 as your price started to move up. Let's say you got into puts here and this happened. You would want to get out at this break above your 9 and hold. You would have caught this green candle here and would have gotten a small hit. But at that point in time, you would want to get out because price is broken above that 9 and held. So that lets you know that, okay, your downtrend can either start to form a support and reverse. So that means you want to get out of your position for a profit if you are in a profit. So how to day trade using moving averages. Step 1, you want to chart out all your major support and resistance levels that your naked eye can see. Here's an example of how I did that. So this chart right here, this is SPY on a 90-day, 15-minute time frame. And I literally just used my naked eyes and looked at, okay, where is price bunching up and got rejected the most of the time? And where has price fell and bounced, a good amount of times during this 90-day time frame on a 15-minute scale, and, confirmed a bounce to the upside. So from doing that, I charted out all my support and resistance levels from there. And if you look at your EMAs there, you can trade within those levels. And I'll show you guys an example. Let's go over to Thinkorswim. Okay, now we are on Thinkorswim. So I'm going to show you guys an example of day trading using this. Let me pull up the chat just to see if there's any questions. Do you chart weekly and daily? Well, see, look, if I'm using the 90-day time frame, that's taking in 2 months worth of price action. So that's strong as hell compared to, well, the 90-day, 15-minute. That's strong compared to, a weekly time frame, a standard weekly time frame or a standard daily time frame. I'm going big and still going in depth using that 15-minute time frame because I still want to get my day trading levels. So let's do an example of what I'm talking about. So what time frame is this? So this is a 90-day, 15-minute time frame. So what I'll do is I'll zoom out and I'll just start to look. I'll just start to go back and look. And this alone looks like, it was a nice range where price traded. So then I'll just zoom in. And this is just getting major. Sorry about that. Somebody in their trash Ricer V6 decided to skirt past my window. So what I'm doing is I'm just charting major support and resistance levels, not really trying to get too nitty gritty about it. This is just trying to this is just trying to day trade really, and not really trying to use too much of an incremental level. Right there. So I'll just do that. Oh, why did I remove it? Hold on. It's probably going to be a little bit sloppy, but extend that to the right. And then I see some right here. I'm just looking for where price pretty much like not really gapped, but had some nice rallies to them and then showed some nice clear resistance. So these aren't going to be too, you know, perfect because I don't want to make them too perfect. You know, I don't want to take the time to do that. Not for right now, but we'll do that soon. You don't use price level tool. Nah, I just like to use my manually just because it feels better and it's more accurate. I wouldn't say more accurate. Let me not say that because you don't want to go against a computer. But to me, it just psychologically, I like to get like a psychological level because if I'm getting that same level psychologically, then I know, you know, other traders will be getting that same level psychologically as well. Again, trading it's a psychological game as well as a numbers game. I only chart my levels on a 90-day time frame. As far as the intraday goes, it depends. If I'm swinging, I'll move on to a 4-hour. If I'm day trading, it's the 15-minute price level tool right now. However you guys chart to get your levels, you guys can chart to get your levels. This is how I try to get my level. I make it, it's obviously going to be better, but it's just a rough, let's just call it a rough draft right now. Okay, so let's say I had these levels, right? Let's just use these levels for right now. That's cricket, but whatever. I was told to start 3 weekly. No, so if you're gonna start on a 3-year weekly and then go to the 1-year 1-day, you can do that, but then you can also add in the 90-day just for that extra confirmation. Again, I don't want to confuse you guys or have you guys revert from any of your, you know, standard original trading methods, but I just want you guys to start using new strategies as extra confirmation levels because it's always good to have more than one confirmation signal to take a trade. So what you guys are seeing right now is me using, in this point, 2 confirmation levels, 2 confirmation points to take a trade. So let me clear this MACD. All right, so let's zoom in on here, extend this. Boom. Let's change that to a turn to a 5-minute. So now that I've charted it on the 90-day time frame, what I'm going to do now, if I can, you know, I don't have to. All right, perfect. So let's say you came in the markets, you know, before this session happened, right? Before this session happened. Let's say you came in the markets and you charted your levels in the nighttime and you got all these levels charted, right? So you were gonna, you know, think if price held this level right here, this major support level that I charted from the previous session, then we could reverse and go up. But what happened in the other session? It gapped down in today's session. So now we hop into today's session, or not literally today's session, but in this point in time. So we have our previous levels charted, our major support and resistance levels charted. Now what I'm gonna do is look at my EMAs. The market opens, and what happens when the market opens? A sell signal automatically happened in pre-market. So at this point in time here, I wouldn't, take this trade only because the signal already happened and I would be chasing at that point. I would then, since I know, okay, the market fully gapped off or had a big sell off, it has to reverse. So I would be wanting to play the call side. So I would want to look for a buy signal. So now I'm coming into the market. Market's trading. The market's trading. It's still trading. It's still trading. We're going on. All right. Now at around 7:30, things start to happen for me in my favor. We can see support starts to build, and then price breaks above our 9 EMA. So this is how I would get my day trade off. The fact that price broke above my 9 EMA, I would now go to my list and think, I get a buy signal if my price breaks above my 9 EMA, my 21, and my 55. So what happened? Price broke above your 9. Boom. It broke above your 21. So at this point in time, the break above the 21, I'll have my calls ready because I've seen that this break above the 21 happen and it held. So I know for a fact if this can hold, we can test the 55. And if we can potentially hold and break above the 55, we can go higher. But for right now, let's just get calls ready. So I get my calls ready at this break above the 21, and boom, we just let price do its thing. We get a red candle, but that red candle quickly gets bought up, and this green candle breaks above that 55. Now at this break above the 55, our EMA still hasn't crossed. It still hasn't crossed above that 55. So I'm not going to get into my calls yet. Only because what can happen is since we didn't get this full cross, we still have to remember, yes, we sold off in the morning. So this could be a fake out on the call side to continue to dump more. You get me? Or it could be a fake out it could be a fake out for you on your call side to continue to dump more, or on your put side, and more dumpage could continue. That's what I meant. So what I want to wait for is for the 9 to cross this 55. So yes, we get this green candle here, but our 9 didn't cross. And this is where that patience comes into play. This is why I said, as so long as you have patience, this will work. Because your average trader right here will chase this candle and chase this candle. Because they say, oh, fuck, I should have gotten here. Oh my God, another green candle. No, but it hasn't crossed. Let me just chase it. This red candle would have happened and you would have, been at a loss. And then you would have gotten your cross. So at this point in time, boom, we have our red candle, and that red candle came and tested this 55 or just right above it and bounced. And I'm pretty sure it bounced because, previous days there was some support here. So that validates this bounce here above that 55. So that bounce was bullish enough to cause our 9 EMA to break through, which caused a nice green candle to form. So the fact that this 9 EMA broke through the 55, now I'm going to be like, all right, I'm going with calls. I see my buy signal happening. All there is to it now is to wait for price to close above the 9 EMA. What happens next? We get a green candle. We break above that major resistance level, support and resistance level that we charted, that major level we charted. We break above it, but we get rejected. So I'm like, okay, that makes sense. This is a major level that I charted. Makes so much sense. Now that we've broken below this, or we've broken above it and rejected, I want to see if we can hold this 9 EMA. Because remember how that 9 EMA acts as an anchor and can pull price? If price can hold above this 9 EMA, it'll cause price to push higher. So price broke below. This is on a 5-minute, yes, because I'm day trading. Again, I'm day trading. Let me check the chat. Again, so I'm not using any other indicators, just solely my EMAs. I'm trying to show you guys how to take these trades just using the EMAs. And then whichever indicator you guys want me to add so you guys can look at it and see how it is, how it correlates, I'll do that, and we'll see if they both add up. Because then if they both add up, that just lets you know that, okay, now that indicator that you chose, that can then be your second confirmation to enter your trade. Are you waiting for? No, I'm just waiting for my 9 to cross above the my 55. Because if you could get across above the 21 and that 55, just think of it as like that momentum building. So with that momentum, something will happen in the market. In our case, we broke above a major level, so that momentum should cause price to push up, which will cause the R9 to start pushing up, which will then cause our 21 to eventually start moving up. Our 21 EMA is kind of our median territory, which will put us in that neutral territory, so to speak. Again, you can use the 50 or the 55. I just like the 55 because a lot of traders rely on the 55 for their trades. So if they're relying on the 55 for their trades, that just lets you know that the trade has much of a better plan of playing out, because every single trader is using that. And that's how trading works. So again, we've got rejected, but we held above our 9. So I'm taking calls. Now that I've taken calls here at this hold above the 9, I'm now thinking in my head, okay, I need to break above this major level here, and then we can test this major level here. If we break above this major level, things will look good for us, and then our 9 will start moving up. And what happened? We got green candles, and our 9 was leading it, and price was always above that 9 EMA, always above that 9 EMA. Now at this point here, we tested our second major level. Now, if you were just day trading this, getting in from, call it 279.49 to 281.56, and if you're day trading, $2 on SPY is way more. It's enough of a movement to capitalize on if you're playing at the money or in the money. What if it doesn't break and reject with huge volume? This is what happens if it doesn't break and reject with huge volume. You still have that 9 to test. So that 9 becomes a support level. So I'll go into using your EMAs as a support and resistance level in the upcoming slides if we have time. But again, I'm in my calls. We get to this major level. It's at 281. What we got rejected at 281.60 from 279.49. That's more than enough profit for me to capture. So I can sell my calls and then just wait for either we hold this 9, or we either break below this 9 and break below that 21 and start to sell off, and then wait for my puts to start going in action. But at this point in time, I've already profited on my first day trade from 279.40 to 281.60, $2 worth of movement already, just using my EMAs and major levels that I try to using my naked eye. Not even worrying about stochastics, volume, news, none of that. Just the EMAs. Now, we see that price started to test this 9 EMA. Now, let's say you've missed this sell signal at this point, or this point to sell, because it literally rejected a major level. You would then want, and if you're trapped in your calls, you want to tell yourself, okay, price needs to hold above my 9 EMA to remain bullish. Price needs to hold above the 9 EMA to remain bullish. If it rejects under it, it still needs to try and reclaim it and hold above it to put price back in that bullish territory. So at this point right here, you had all this, choppiness happening. Now your average trader at this point would have gotten faked out. They would have easily gotten faked out at this chop. Yes, you would have experienced some premium burn, but your average trader would have gotten faked out, but you wouldn't have gotten faked out. Because while you did experience this chop and your price was breaking that 9 and did break below that 9 before, but just look at the candles patterns that are happening at these break belows. Like that's bullish. Like it makes no sense, but that's stocks for you. But again, as price did break below this 9, it didn't cause our 9 to curl and break below our 21 and 55. And who remembers who can tell me what happens when your 9 EMA crosses under your 21 and under your 55? What does that mean? Sell signal. Correct. So if you're in calls at this point and this is all happening, what would you have done at this point in time? What would you do? Correct. Somebody said sell. It will make sense because price did break below that 55, but we didn't get our EMAs to cross. So that didn't give us a sell signal. So your average trader will panic, but you having the patience would have seen, okay, we are choppy, but we didn't get a sell signal. So I'm going to stay in my calls because if we can retest and break and hold above this 9, we will go back in an uptrend. And what happened? Boom, we retest, broke above that 9, put price right back in that uptrend. Boom, we got a little mini bull flag. Boom, mini bull flag. Boom. This is algo trading, by the way. You would have gotten all that. And what happened here? What do you guys see here? What do you guys see here? What is this? Exactly. What does that gap mean? What does that gap mean for your calls? Uptrend. Exactly. So what are you doing if you're in calls? You're still holding. So from 279.49, if you didn't sell and you still seen that price held above the 9 EMA, you've broken through your levels that you've charted, mind you. You remember those levels you charted? You've broken through those levels. We're already at 283 from 279. And we're just using EMAs and literally levels that we charted. We're not using any other indicators. We're not using news. We're not using flow algo. We're not using Kevin's callouts. We're not using none of that. We're just literally looking at a ticker we want to look at, getting our levels, and taking that. So boom. So we're good. I'm gonna get to that soon. I just let me show you guys both the call side and the put side. So yeah, we're in our calls, and boom, you would have captured all that, just using your EMAs. Now, same thing for the puts. Let's look for where will we get a sell off at? Nice sell. And look, the sell off even took place within our major levels. So those major levels still held, they're still valid to a certain extent. So boom, we got our sell signal. Our 9 crossed below that 21 and a 55. And that's our sell signal. We hit our first major level that we charted. Your average put holders not using the strategy would have panicked at these 2 fake out candles, because that fake out candle was from 283.62 to 284.46. But we seen that we didn't break above that 9 EMA to cause price to go in an uptrend. Yeah, so once your 9 crosses below that 55, price is going to start selling off, which will cause your 21 to start breaking below that 55. So you'll start to see that 21 break below that 55. And what do you guys see here? What is this? Another gap, and that gap is pointing to the downside. So what does that mean? It's a sell-off. You hold your puts. You're not getting faked out at these green candles because your EMAs are not curling. Your price didn't break above that 9 to hold, to break above the 21 to hold, to break above the 55. So you see that downtrend happening. All your average sellers are selling out on these green candles, but you're just looking at them like, all right, for sure. I got in at 285, or in fact, let's just say we got in at 284.16. Let's just say, fuck it, we got in there. Okay, we would have seen these 2 green candles here, but we didn't see that break above. So boom, you would have gotten rewarded right back down 283.78. Boom, break below 283.15, bounce, but still didn't break above that 9 EMA. Rejected at 283.33. Boom, right down below that second or that major level that we charted. 282. So you're capturing dollars just using your EMAs and major levels, not even using any other indicators. But we're gonna add in those indicators in a bit. But I'm just trying to show you guys how crazy this strategy works so long as you have patience. I'm not sure, and I don't think that they give the full 21, 921 and 55. Yes, I personally use the strat every single day. That's why you guys sometimes see my alerts in the watch list, and I'm like, all right, like I say that price is breaking above level, and then you guys see that price started to reject, and then some people are adding like, oh, have you sold? Are you still in? And I say, no, I haven't sold, and it's because I didn't get a sell signal or I didn't get a buy signal. You get me? Or like my EMAs didn't tell me to sell or get out. My EMAs are still telling me your position is still valid. And what will happen later on? The trade will work in our favor, right? And you guys will eventually say, oh, wow, you're on point. The only reason why I was on point was because my EMAs were showing me that. That's literally the only reason why. For the most part, yes. This is literally the only strat I use. This strat and my watch list. So I'm gonna Trader, can you add a question? You can use candlestick patterns with this. Yes, bear flag too. So again, that's another thing about this strategy. Once you master understanding what your signals are showing you, again, which is why I said don't rely solely on them, but once you understand what they're showing you, then you can use your other indicators and your other candlestick patterns and all that. So what, this is a bear flag, like someone said, another bear flag, another bear flag, and then someone also said candlestick patterns. Exactly, that's another one as well. So again, it's just crazy how this works. So you got your sell signal and you got your downtrend signal. You just use support, you trade support resistance and EMAs. Yes, but I'll also show you guys what I have. Right now I'm gonna what tickers do you guys want to see this signal on? Drop your tickers right now and we'll pull them up right now. Amazon, Tesla. Ooh, okay. Fuck, I fucked up. Okay, what do I see a lot? I see a lot of Boeing. I see a lot of Facebook. I see a lot of Amazon. I see a lot of Tesla shop. So I'm thinking Amazon, BA, Facebook, Tesla shop. Is that good? Amazon, Tesla, BA, Facebook shop. All right, so Amazon first. What do you guys want to look at today's session to see what happened? All right, let's look at today's session on a 5-minute. Look how beautiful that looks. Oh my God. This is today? So you got a buy signal right at the open. So what I would have done is, okay, the market opened, boom, we got a nice green candle, but we got rejected. So at this point in time, I would have instantly went to my setup. Okay, if we can hold above this 55 and break above the 21 and the 9, we can go back in that uptrend because the momentum already looks nice. So what happened, got rejected, and then instantly reclaimed above that 9. And we had an uptrend all throughout the fucking market morning before breaking off due to some type of news. Holy shit. And guys, look, this is just the EMAs. You don't see volume. You don't see MACD. You don't see FIBs. You don't see none of that. mRNA. Fuck mRNA. I knew exactly why they did it. They did an offering. But okay, Amazon, you had a clear buy signal triggered, clear uptrend signal. You had some sort of a fake out. Your average traders would have gotten faked out here, but you didn't get faked out because price broke right back above that 9, causing your 9 to push right back above. You didn't get across below the 21 either. So boom, your uptrend was still intact. Boom, boom, boom. And then you finally got the break below the 9 here, causing your 9 to break below that 21. Then you started to see some resistance from your 9 EMA. Then you got the nice break below that 55. So this is all patience. Mind you, I'm not in my puts here at this point. I've gotten out my calls here, but I'm not in any puts here at this point. I still want to wait for my 9 to cross below that 55. I see all this happening, but this is choppiness right now. I want my 9 to cross below that 55. You get that cross below, what happens? Boom, boom, boom. And on my watch list, if we go back to my watch list, and this is just Amazon. If we go to SPY and I do my watch list, this same setup happened. And I had alerts for puts on SPY too. Where would I enter and get out? So, okay. So at this green candle here, that was a nice hard rejection, which caused this line to start testing this 55. So I would have waited for the next green candle or the next candle to open up and go under this 9, and I would have gotten in my puts. The next candle opened up, broke above the 9, but rejected right under it. I would have gotten in puts there, and you would have taken it nicely. So, do you keep EMAs for crossing here? No, for my alerts, I just keep my alerts separately. So I just have my alerts separate on a different charting platform that will trigger on its own. I don't like to bunch it up with my EMAs because it'll just crowd everything up, and I don't like that. But that's Amazon. What's next? BA? Previous charting from BA. What app do I use for alerts? I mean, you can honestly use Thinkorswim for alerts. Just create a different account so it doesn't show up on your charting software. Like, okay, let's look at BA today. What did BA do today? Oh, juicy. Okay. So BA opened up instant sell signal. Instant sell signal. I would have waited for this nice red candle because we rejected under that. Actually, I would have waited for, yeah, I would have gotten on this red candle. Yeah, because that 9 crossed nicely. Yep. But it was a sell signal. You wouldn't have really captured too much, only if you gotten in the morning, because it was just like pretty much chop. But it was a sell signal in the morning. Chop, 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 premium burn to a reversal, potential reversal. Fake out because I'm pretty sure it was a resistance here. Looking at the previous days, exactly, resistance. So that explains that. So if I was trading my major levels, I would have seen that happening, that resistance happening. What are your thoughts on regarding waiting in the morning? So it all depends. It all depends. And normally I like to give the market, I like to let the market play out and do its thing before, I take a trade. But unless, like, let's say this big pressure happened, which caused our EMAs to quickly sell off, like, if this never happened, I wouldn't have taken the trade. I would have, let's say this didn't happen and then just all this happened, we would have opened the market with all this happening. I wouldn't have taken a trade. I would have maybe looked to take a trade at the reversal, which would have been here. But also I would have kept in mind that from me charting my levels, I would have noted that this would have been a major level to note that price could reject off of. And that's what it did multiple times, as you can see over here. So it was just pretty much chopped. Like, you would have scalped some calls, but not really make much due to premium burn. But you would have then came back in on that mRNA news, seen that everything was selling off, go back to BA, see that another sell signal happened, and you would have taken it on. So when this happened, and this, like, let's say this happened, again, knowing that when price quickly sells off, you should always know that there should be some sort of retracement, like I explained in my examples. That retracement happened. But remember, when there's some sort of retracement, but there was a sell-off, and we know that there was a sell-off, so we know the news was bad. So in this case, we had news, and we knew the news was bad. So we're looking to see if price can reject at the 9 or the 21 or the 55. We tested the 9, we didn't reject. I'd be like, all right, let's see the 21. We tested the 21, we didn't reject. I'm like, all right, is Boeing just going to say fuck it and just rally on its own on bad news in the overall market? Because it's corrupt. It can do that if it wants to. We tested the 55, we rejected. Clear resistance. Clear resistance. And boom, started breaking down. Like, where would you get in on here? I would have honestly got in here, to be real with you, because this resistance slap would have been so quickly, and the new candle would have opened up here, most likely. So I would have probably gotten like around here, because I would have already seen the sell signal already happened, but I would have wanted to wait for, to see if we fully rejected under that 9 for that sell signal to be valid. And so around here would have been a nice entry I would have gotten because we were under that 9. So like, 133.83? That would have been a nice entry because it's under that 9 EMA. So yes, you've missed out on all this, but this is for a reason, a good reason. This is just white noise in your case. This is much more clear, much more accurate. You get the setup and no noise. And you take it down before the market closed to 131 from 133. I mean, again, if you're way more of an experienced trader with candlestick patterns, because me personally, I don't really rely on candlestick patterns too much. I just use levels, my watch list, and my EMAs. But if you're good with candlestick patterns, And you can identify all these major candlestick patterns. I mean, I know the falling wedge, bear flags, bull flags, all those stuff. But as far as the doji, evening reversal star, all those nitty gritties, if you know all that and can spot that in this candle pattern to get an entry on puts, that would have been an even better entry on your end. So again, if when you add those extra indicators in, they just work to your advantage. But let's pull up another stock. What's the next stock? Tesla. Tesla. Let me see. Yeah, we'll do Facebook after Tesla. Yeah, so we probably won't have time today to go over using support and resistance on your EMAs to day trade and the watch list, but we'll do that in the next session. But I just want to now just quickly before I wrap this up, go over the couple tickers that you guys want me to go over and then add in a couple indicators that you guys want me to add and then see how they correlate before I wrap things up. So we're just looking at Tesla today. Ooh, Tesla was nice trading today actually with the EMAs. It would have gave you perfect time to enter and exit and everything. So boom, the morning happened. Chop City. Your average trader would have been faked out, burning their premium away, just giving it away to the option sellers. But you, on the other hand, would have said, okay, I seen this sell signal happen, but remember, you want to see if price can break above that 9 and that 21 and 55 to see if it can be a reversal, because we did get a huge sell-off. And knowing how Tesla is, them reversals are bound to happen. At this point, yes, we did get a sell-off, but price reclaimed that 9 and just went into chop mode before giving us a clear buy signal. And we bounced above that 9 EMA, closed and opened above the 9. So just at this nice close above this 9 and this push, I would have taken my calls and held, would have known to hold for a confirmation at this hold above, at this the break above. So perfect buy signal here. You'd have taken it. Your average traders would have seen you profit and they're like, why? Tesla was chopping this whole morning. Yeah, but I had my patience and seen my buy signal happen. And then I took it. Yes, we got this choppiness, but what happened, guys? What's happening here? Why am I not selling my calls? Somebody tell me. You can spot the morning choppiness. It'll be so easy to spot, trust me. But how come I'm not selling my calls? What's the exact reason? Correct. Price hasn't broken below the 55, which will trigger my 9 to break the 21 and the 55. No cross has happened. No cross has happened. Price hasn't broken below it. Every time it tried to break below it, it reclaimed instantly. So now what do I want to happen in order to stay in my calls? Stay above the 55. Stay above the 9. Correct. Stay above the 9. Reclaim that 9 EMA. Somebody asked, let me see. Somebody asked, is it a good idea to sell in a chopper range answer? Okay, me personally, guys, in the next class, I'm going to show you guys how to trade using the EMA that is support and resistance levels. But with this chop, you guys will be able to profit in this chop while other traders are being fucked up. So you would have seen all this happening and you would have known. You remember those examples? If your 9 breaks above the 20, or if price breaks above that 9 and holds that, you can then use those as support and resistance levels. And I'll show you guys how to do that in the next session. But yes, essentially, once you understand how to get your signals, you can trade the chop, but be so quick about it. Don't stay in it too long because you have to understand it's chop. But you can essentially trade the chop. But let's continue. So yeah, Tesla gave us a nice buy signal and held above the 21, reclaimed the 9, and we just continue going up. Now with that mRNA news, again, that mRNA news caused that big sell-off. I've seen that sell-off happen, but I also wanted to note, with the big sell-off has to come a little retest. You have to have those bulls that still want to buy that dip. Again, this is a level that I charted on Tesla a couple weeks ago, and that's still remaining valid, which is crazy. But we had that sell-off, and we retested above that level I charted, but we rejected because we couldn't break. We broke above the 55, but got rejected at that 21 from the break above the 9. So at that point in time, we had a nice red candle, which then caused that 9 to be dragged down under that 55. Now we're under our major level that we charted. Puts, baby. Puts are a go. You take your puts and you bank before the market closes. So you could take your puts, what, near 815, get out at 807. Who cares if you missed 818 to 815? Who cares if you missed that? You take it from 815 to 807. You still made a nice profit. What other stock? Facebook. Perfect. But this, I charted this too. Oh, that's crazy. That's crazy. It all makes sense. It all adds up too. No wonder. Okay. So my levels all made sense. And if we're just pulling up our EMAs with it, we always held above and reclaimed that 9 EMA, which kept pricing that uptrend. So if you took calls and seen this chop happening and, you know, all this happening, these are little mini bull flags, by the way, but you would have never sold your calls again, which is why I signaled at 2:14 in the morning, and pretty much you would have held all the way up until 20, because price never broke below your 21 and always reclaimed above that 9, and your EMAs never crossed under to give you a sell signal. You just had a buy signal from the morning. You would have gotten in at a nice entry here and would have held all through, because what's this? An uptrend signal. Wow. And then even if you wanted to play puts on it, you had somewhat, nah, that's too risky. Nah, not enough time. Not enough time. Nah, Facebook is too strong. Look at that. It wants to buy. It wants to go back into a buy signal. Buy signal right now. What, after hours? Let's see if this thing can hold. We have some levels to test. We have a resistance level here that we can test. A level here that we can test. Maybe a level here that we probably can test. And a level up here that we can, probably like up here that we can test. So I can probably have these levels charted out, but we are in a buy signal going into after hours. So if this can hold into pre-markets, then things can get juicy for Facebook. IV works with the momentum. So let's say you're down a lot because of IV. IV will always go back and update quick if momentum builds. So you'll recoup your losses much quicker because IV will build back faster. Like in this time, yes, you would have experienced chop on your contracts, but with these candles here, all this chop would have pretty much been, you know, invalidated, because your IV would have been given, like all your money would have been given back on just the momentum alone, because IV moves on momentum. So the momentum with these candles would have given you that money back and would have actually shot your contracts up plus some, because the IV probably spiked up a lot due to the news. If the market dumps tomorrow, that's a sell signal. You guys could just wait for Facebook to give you a sell signal and take puts. What's the next ticker? What's the next ticker? Shop. Shoppity shop. I honestly think Shop had a Shop probably overreacted to the Facebook news today, in my personal, from my personal experience or my personal view. I feel like Shop had an overreaction from Facebook news. But let's look at Shop today. He bought the Shop. Wow. Okay, that's wow. Now, that's a previous day on Shop. That's not today. Today is Chop on Shop. Today was Chop before it gave you a direction. So you had Chop. So again, that's where that patience comes into play. You had Chop. So you would have known, knowing how Shop trades and knowing how the IV is on Shop, I wouldn't even take this position. Because I've traded Shop before and I've gotten messed up with the IV. I wouldn't take this position. This is pure Chop. Like, even coming into this point in the market, I would have seen all this and like, yeah, it's Chop. Let me get a clear direction. Because if I look at my from previous days, these are clear major levels. Clear major levels. So what happened after this chop? We got that sell off from the Facebook news. It was instantly bought up, and that buy up, that buy the dip that the bulls caused, made our EMAs turn into a buy signal. So you've gotten a buy signal, a nice buy signal on shop near what, if you guys know how the candlestick patterns work, you'd have taken it near what, 743 if you caught it, or 747 if you wanted to get it on a dip, and would have been able to easily write it up. It had a high of what, 764, and it's just because what is this? What is this, guys? An uptrend. The gap. Yep, the uptrend. So I'm holding my calls. Yes, I see this red candle. I'm not getting faked out. Your average traders are getting faked out. I see prices still above the 9 EMA. I have no reason to sell my calls. Boom, I get blessed with a green candle. I get blessed with another green candle. Okay, I see some red candles. See some red candles, but I know that if we are still above that 9 EMA, we're still bullish and we're still in that uptrend. So I have no reason to sell my calls. And if I look at my candlestick patterns and my flagging patterns, I can see that this is a bull flag formation that wants to form. And it's a mini bull flag that's trying to form in there too. And that mini falling wedge too that caused this pop, this slight pop. That's a small, tiny falling wedge. But again, we still held above that 9 EMA. So I'm still in my calls from, what, call it 747 if we run 747. We're at 760. So, I mean, it's just crazy how this EMA strategy works so perfectly. What was the other stock that you guys wanted to look at? So when you're watching and watch this, you're looking at price levels, or how do you know if it's crossing or something? I have my alerts set, so I know, or when my alerts trigger, so I look at my watch list first, but that'll be in the other sessions. I don't want to really go too much in depth with that, but I'll say when I look at my watch list or my alerts trigger, I'll then look at my EMA setup and see what my EMAs are showing me. Most likely my EMAs are showing me a buy because the levels that I'm setting my triggers to go off of are critical support and resistance levels. So those have to trigger buy or sell levels or buy or sell signals on the EMA. Yes, you can use trailing stops. You can. The strategy right now is for day trading, but there is another stock that you guys wanted to look at. Like, it was Amazon, Facebook, Tesla, BA, and then. Or, hey, if you're serious, I'll really do it. I really do. If they have it on here, I think it works for Bitcoin. I think. Don't quote me on it. I don't even know if they freaking have it. What's Bitcoin ticker? Fuck it. Let's just do Apple. Apple's like what SPY, so probably gonna have the same movement, just like what SPY did. No, I think they do crypto. No, they do, because I've traded Bitcoin using my EMA crossover on Forex and was able to profit on it. So you can. I think it's on here. I just don't know the ticker for TOS on Bitcoin, but there is a ticker for it. I think. But looking at Apple, nice buy signal from, or nice uptrend signal actually, because this is a mini uptrend if we want to be technical about it. But price held above that 9, so I could look to take calls. Just look for a perfect entry because we're above the 9. We had a red candle. Okay, so long as we hold above that 9, I'm taking calls on it. We held above that 9. Boom. You could have easily day traded from what, 315 to 318, in and out. Waited for another reentry or waited for puts or something like that. Let me see. I think so. Yeah, you could even use it on Forex pairs too. Like, that's how crazy this shit works. It works on everything. Like everything. Everything. What is that? Buy signal. Buy signal. Sell signal. Sell signal. Mini buy signal. And this is Forex, so these little mini sell signal. Sell signal. Still selling off. Let's see if it rejects under this, but sell signal. This is live right now, I think. Yeah, so it works on everything. Can you please prepare your watch list? Not today. For swinging, you want to use a 4 hour, but I will show you guys how to. You know what? I'm gonna show you guys how to swing right now. I'm gonna show you guys how to swing trade right now. So if I'm swing trading using this strategy, I like to use SPY as my bread and butter, but you can use the other. You know what? Let's use Apple, so to speak. If I were to swing trade this, right, I will be using the 90-day 4 hour. And again, I'm just sticking to what my EMAs are showing me because remember, the bigger the time frame, the bigger the move. So this was an uptrend on a bigger time frame, on a 4 hour time frame. Look at that 4 hour move. You see that? So, okay, let's look at what happened today and what I would essentially be expecting from tomorrow. You guys take notes on this. Let's see if it actually happens because like this is going to be like fresh, right for you guys. So looking at Apple, Apple did good today, did pretty perfect today. Not too well, but not too shabby. We are still confirming that uptrend. Our uptrend is still remaining intact, but this is where things can get tricky. We did close above that 9 EMA, but it was a weak close because of that mRNA news. So here's how this tomorrow can go. We can start to test. We can either break under this 9 EMA and test this 21 EMA being 312. And if we don't hold 312, then we can either start to see price move towards 309 because the market will probably sell off tomorrow. People are anticipating a sell-off. And then we can start to see, price head towards the 55 EMA being 305, 306. And if that happens, you get a sell signal, a major sell signal. So this is just watching price, seeing what price is going to do tomorrow, but we're not going to take a trade on it yet. But if tomorrow the price ends up closing under our 9 and under our 21, things won't look good. But you know what? Let me pull up a study for you guys and show you guys something cool, the fib level study. This is perfect when you want to take your swings. Perfect. Okay. So do you guys know how the fib works, right? When price breaks above one fib level, it always has to test the next fib level above. It almost always will. If it breaks below a fib level, it'll test the next fib level below. So looking at Apple again, yes, we are still in an uptrend. So the market can, pick up intraday and, go back into an uptrend. So we can get to a point where we test crazy lows, or we can test, 311, maybe a 306, something like that. But the market can then just reverse, and start chugging back to, new highs or something like that. But if the market decides to try and sell off, we can see a test and maybe near the 303 fib level. But if the market decides to act right tomorrow, then Apple can start to push higher, breaking above 317. If we look, that'll give us a nice break above that 9, and I'll take a swing because we are above that 9. We are above that 9 EMA. So at this point in time, no, I'm not going to take a swing because it's too tricky. We're not well above that 9. Like a perfect example of being well above a 9 going into a closing. Right here, going into this closing, price was well above that 9. If you look at after hours, held above the 9, pre-market held above the 9, boom, you got rewarded, cash opening. Same going into that closing, price held above the 9. Pre-market or after hours held above the 9, pre-market held above the 9. Cash session, you got rewarded. This is taking your swings because price is holding above that 9 for calls. Change for the fifth study. I'll send the pic of this script in the chat. Actually, let me see how I can get this. If anybody knows how to transfer scripts from TOS to Discord, just DM me and I'll be able to do it. But I got the script sent to me. I opened my studies, but people say they can't see it. Apparently, people say, see, look, my studies are open. Can you guys see it? Yeah, see, yeah. It's a script. It's not a study. So the script is different from a study. Um, it's like a link that you have to get sent to you that you then transfer over to your. No, that's the screen. Let me see. I think it's no. I'll find it. I think. Oh, I think I know. 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 No. I found it, guys. Found it. Finally. Finally. I got it, guys. No. I'll find out how to do it. But yeah, that I just want to wrap things up there. So again, what happens when my 9 crosses above the 21 and 55? Can somebody answer me that? Correct. When I see that my 9 has a gap above my 21 and 55, what is that? You hold uptrend. Correct. When my 9 has the gap below the 21 and 55, so my 55 has a gap above the 21 and the 21 has a gap above the 9, what is that? Downtrend. Not, it's not a sell. Your sell is when your 9 crosses below your 21 and your 55. When you see that gap, that's why I caught you guys off guard. That gap, some of you guys got it right. That gap is a downtrend. You hold your puts. But when your 9 crosses below your 21 and 55, it's when you want to sell. But let's pull up an indicator real quick because I don't want to cut you guys short. Somebody says stochastics are a site, right? Let's pull that up. ADX. Oh, yeah, we'll do ADX on that. ADX swing or day trade? I'll do both. Fuck it. Oh, okay. Okay, okay. ADX, okay. Interesting. Very interesting. Very interesting. Very, very interesting. So we're well above that 9. We're well above that 20 buy signal, clear buy signal, clear buy signal, right? Or an uptrend signal too. The uptrend signal is still intact. It's not a buy signal, uptrend signal. That MRA news did cause a nice pullback, but we still managed to hold above that fib level, that crucial fib level, which can cause a double bottom. It can cause actually a triple bottom. So if 1417 holds, because we're already holding above that 9 EMA, which is perfect to take a swing. If 1417 holds, I'm expecting some nice upside tomorrow, maybe to 1442, and then we could probably break out and then start checking for that 15 area. You know, that 1480, 15 area. Let me see if there's any resistance up above. Maybe like 1459 and 1460, 667 around there. She has some resistance around there. But if we can hold above 1417, we could probably see 1459. 1459 probably for a swing. This looks good for swing on calls, actually. This looks actually good for swing on calls because that fib level will be a hard, nice bounce for support. If you can hold the fib level for support, you can test the next fib level above, so we can start making the way to 15. If you're just trading shares, this will be perfect for shares too. Pen on the 4-hour, I'm thinking it'll continue up. The levels are based off the body of the candle. My levels are just based off where I see all the candles bunching up and getting rejected majority of the times. And I'm just looking at where it happened in the previous trading periods, because then that lets me know that at that point in time that those were levels of clear resistance, and that I should be aware that price can reject at these levels. I'm looking at the chat right now. Pen 4-hour. I said I was gonna day trade this. Hold on, let me look at this on a smaller frame. See what's going on a smaller frame. Yeah, nice. So on a smaller frame, 15-minute frame, just to see what happens. If we need a hold above this 55, we need a hold above this 55. Now, remember that 1417, that fib level being strong. If we can hold this 1417, we can get a nice bounce. We can get a nice bounce, and it can probably try and reverse because it can double bottom here on a 15-minute. But if we can get a bounce on this, things will look good. For right now, it's almost trying to sell off on that on the 15-minute. It would have to break below this 1417 to, let you know, okay, things are getting scary, because a break under a fib level, the next fib level below can easily be tested. And yeah, that's a nice gap. It's a nice gap. How long to draw points for fib levels on TOS app. That's where the script comes into play. I don't know how to use the TOS fib levels on the app. Can you check Amazon for swing and also mini high today? Can send me your schools. Okay, let me just do pen real quick on a 4-hour, then I'll do Amazon, and then I'll wrap it up. Then I'll look at RCL, then wrap it up. I'll just look at all these on the 4 hours. I don't want to do the most. Pen 4-hour. Oh, interesting. You guys got some nice tickers. I could be here all day, to be honest. Above that 9 EMA, perfect. Closed above it perfectly despite the sell-off, and even opened with a green candle in after hours. So this is clearly looking like bulls want more on this. Nice bull flag that we're looking at here, and we did hold above this 2162 fib level. And what did I say? When you can hold above a fib level and hold above it, you can test the next fib level above. So 2584 can be tested tomorrow easily, and if that holds above, depending on what your next levels are, but you can have room to the 26 level, 27 level. Let's look at beyond. Interesting. Held above the 9. Tomorrow's open it could open green. Beyond. If the market does sell off tomorrow, Beyond could say, fuck it, I'm gonna just move on my own and test that 147 fib level. But it's in some indecision territory. It's choppy right now. It's interesting though. I mean, I would swing this just because it held above that 9. You could get some type of profit tomorrow, but I would honestly want to just set a watch list on this and get levels, and then rely on what my EMAs are on. But then, yeah, this close is not bullish enough for me to take a swing, honestly. I'll use 650 day delta. Can I shoot you? What the red indicator is the 55. Yeah, we can see your messages, Harold. Let me see. There was another ticker I was gonna look at, RCL. I was gonna call it a day. Yes. I'm always buying at the money and end of money. This is why I said you want to have a nice account size. Now, if your account size is not that big, this is where you, when I teach you guys how to create levels, you'll be able to take any ticker really and create levels for it and play to your, account size. But trading SPY, you really just want like $1,000, $1,500 account really to a $2,000 account. Looking at RCL, it wants to form a mini bull flag, but that sell-off did cause it to break under that 90 MA and close almost under it. So you might see a sell-off on RCL tomorrow if price cannot reclaim that 90 MA. And if it does ever even want to get a pump, you could get a pump maybe to 43. But if that doesn't break above, things may get weird. RCL, they're on a 4-hour. I already did Amazon. But yeah, these fib levels work. I'll show you guys my setup and how like I trade and everything. Like I'll show you guys the indicators that I use. So these are my indicators. Yeah, it's pretty bunched up and all that, but I understand them and I can get them. I'm used to them. So it may look confusing for you guys, but yeah, this is literally how I trade. I don't really rely on all these indicators too much. This is only when I'm trading aggressively. This is how my screen would look. I don't use multiple screens just because like I don't have time for that. SQ. Interesting. SQ could see some upside tomorrow if 78, what is that? 78.52 can hold. If 78.52 can hold, SQ can see some upside. But then if not, it can test 75.75. Or it can have C room to 75.75. But we could probably test 78 flat, then 77.25. Maybe bounce near 76.62. I don't know. The sell-off just didn't pull the market down too crazy enough, in my opinion. I'm gonna cut it short here, guys. I feel like I went over a lot of tickers, a good amount of tickers. Hopefully, you guys are all satisfied. Oh, let me see if I can hold this chart up. I can't see shit. Yes. Hopefully, you guys did learn this strategy too. Please go on demand. Use this strategy. Don't use any indicators right now. Just use this strategy. It's literally simple. I like to again use the 90-day time frame to get my levels because I like to see how many times price tested that price levels, those ranges. It just gives me that extra confirmation. Yes, I'm gonna try and share the script. I'm honestly gonna go on YouTube and just search up how to share a script from Thinkorswim and just do it like that. I don't know why I didn't do that the first time. But thank you guys all for showing up. I really appreciate it. This class again was a little bit longer than the previous ones, as I said, because we had to really go in depth and get into the nitty-gritty. But again, it's simple. It's so simple. You guys seen me use it without any indicators the first time. So just imagine when you guys start plugging in your own indicators. Danny, you're gonna post the auto fib in Discord? For sure. Thank you. Thank you guys. All right, boys and girls. Take care. Stay safe. See you all in the next session. In the next session, we're going to go over trading using the EMAs on support and resistance, and then setting up the watch list, creating our levels so you guys can literally trade like me. For sure. Thank you guys. Oh, my IG. I can't move this thing up. Oh, there you go. Instagram. My Instagram is sorry I tried. My trading account is Jay the Trader. Oh, I was thinking about that, but I want to go on Zoom first for you guys before I fucking provide Instagram with anything. Yeah, I'll follow back the majority of you guys that I can. On my main account, I can't follow back all of you guys because I'm gonna hit a cap at 7,500. So I'll follow you guys all back on my trading account. Plus, I'm gonna go private on my trading account anyways. But all right, people, take care. It was nice seeing you all.